The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this Thursday, April the 8th. My pleasure to be here. Hey, this is going to be really interesting. We've been waiting for ChapmanWave leg Ds in the different indices. So now look what we've got. The Dow is down 67 at 33,373. Let me just explain it because they always have new listeners. So let me just go through this carefully. Right here, this is the one. Is it? No, please. There it is. Okay. So within the context of the ChapmanWave methodology, the umbrella of the ChapmanWave, we try to identify the lowest low bar and then count each successively higher peak. It's like a sawtooth wave, a rising sawtooth wave. And each peak is alphabetized. I label them. This was all done during the period where Proctor was making Elliott Wave famous, and I thought, I don't want to get confused with Elliott Wave. Mine is so different. For people who have done my work, they know that it's a lot easier to decipher than Elliott Wave. Anyway, the basics of this is you identify a low bar, and each successively peak is alphabetized sequentially, and you can only go to a G. After G, there's no H. It recycles. Or G is where it turns down. But it's at that fourth highest peak, and it's sequential, so it's A, B, C, D, E, F, G. It's that fourth highest peak where other things can happen. That's a simple. That doesn't mean to say it has to, but that's where very often, let me just move this away for 1 second. Look at this peak D. Peak D in February of 2020, 29,568. The market has a little bit of a drop, just 39%. Down to 18,213, March of 2020. We were lucky we got long that exact day of the low, still holding that long position, taking a little bit off, holding core position. So I'm saying that within the ChapmanWave methodology, we got peak D. We're waiting for the diamonds to make a peak D. It hasn't. It's the peak C, and it's kind of stalling. Not terribly, but it's taken 3 days since that high of 336.15. As a 333.79, I suspect there's going to be something like a rogue wave that just suddenly has a whoosh to the upside, perhaps getting to that level, and that's where we're going to make some decisions. That's number one. Number two is, wait a minute. Do we even have to wait for that? After all, the root is the Dow. The Dow's already made, cash has already made a D. What about the S&P? Well, that was lagging. That was at a peak C. Today it went to a leg D. But wait a minute. Before you get too carried away, the MACD, the moving average convergence divergence, is really strong. No sign yet of the histogram turning down. We'll see by the end of the day here. But so far, everything's very good. The stochastic is fantastic at 96% and flat. Hasn't turned down yet. The on-balance volume is lagging. It hasn't gone to an overbought level. The relative strength index is still very good at about 78%. So it's going to have to be news that comes out to just give a zonk to this market to say, could it be interest rates? Well, wait a minute. Interest rates, they're steady. 137.84 on the Lehman 20-year Treasury bond fund. Stuck in this lowercase h to lowercase m pattern. Hasn't really done anything at the lower range. Look at the weekly chart. Look at that monthly chart. Yields looks like a stock. 179.70 down to 133.50. What was it? 133.19 on the 18th. Let me put that in so I don't have to keep checking out. 133. Did I say 18 on the 19th? Let me put that in. Then I'll have to check it out. That was a quick memory slip right there. Okay. So, yeah, this is very interesting because on the 18th, it is 133.19 on the 18th, not 18 on the 19th. So let's just change that. So this is 19 right here, 19, and we'll make this 18 and we'll put in a / not a dot because that gets too confusing. So 133 to 137, 4 points, not a bad little rally, but I'm not sure what it's going to be. Could it be all of a sudden political? I don't know what it is. All I can say is that this is where I say to subscribers to my opening call, we're trying to raise cash. I don't want to get you carried away with buying. At this point, even though we still have some stocks that I like, we had a potential screamer today. It screamed without us because it gapped up and it really had a big move. Now it's pulling back. But 10:10, it's done. I said you got to buy it before 10 minutes past 10 Eastern time. So that one's out the window, gone. Actually, I'll tell you what it is because it's so fascinating. CHW, talking about interest rates. Look at this. I loved this stock about 3 days ago. I just didn't put it on for I had other things that we were looking at. And it had a great move. CHW is Calamos Global Dynamic Income Fund. You know, I'm looking at this. I'm always looking at symbols. I look at the chart pattern, and then I look at the price, and then I look and see what it is. And this morning I had the whole thing written up, and then I changed it. I said, oh, my God, I can't have a dynamic income fund as a screamer. Who's ever heard of that? And then I said to myself, no, nonsense. If it's a screamer, it's a screamer. Just do it. So I put it back in there. So the idea was that this huge move up in the daily chart, it was right here. So I did my homework. I drew these ChapmanWave inside track repellent lines. You see in the weekly chart, it says should rest there. But I had this as a leg C. C should go to a D, number one. Number two is in these screamers, these are stocks that are usually under $10. This was at about just over 10. I said to buy at 10.71. And before 10.10. Why? Because this should have had a powerful move to the upside, a follow through because the MACD is strong, stochastic strong, on balance is strong, and it's got the momentum. It's got all the characteristics that I look for with a screamer. Screamer is a stock that I like to get in very low digits, single digit preferably, and it should have a 3 to 5% move. That day, we grab profits on the way up, and if our initial stop holds, we've got it, and it can actually continue as a pretty decent I can't even say intermediate term because we don't know, but longer than a short-term trade, all right? So look what happened. It gapped up. The open was 10.86, and yesterday it closed, I think it was at 10.78. So 10.77. 10.77 was the close. It opens today at 10.86. That's I'm not going to buy a gap like that. And it screams at 10.88. That's a really nice percentage gain. Anyway, we didn't have it, but I'm just fascinated because this is called the Calamos Global, CHW is a symbol, Dynamic Income Fund. Wow, that is dynamic. So all I can say is we didn't get it. It's okay. There'll be more. And the most important thing here is we are going to try to conserve cash here because I think we're in for a choppy period. I'll just do this real quickly. Why? Because if you remember the QQQ, the index 100 was with 338 and plunged to 207. That's a huge move. And while it was doing that, the Dow was leading and the IWM. I'll talk about it when we get back. Dow's done some.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, so we're back, and now what we're looking at is the QQQ, the Invesco QQQ Trust Series, has gone to a leg D. Now, in my work, and I'm going to be doing a webinar a week from today, I'm going to show you charts. Let me just do one thing real quickly here. I'll just grab this at the background because I don't believe it has updated notation. No, it doesn't. So I'll be taking the blank chart. In this particular case, it's not blank. I will find one and put it on tomorrow and show you. But basically what we're doing here is what I'm going to be showing you right there is how you can draw trend lines, how you can talk about why do I just grab the left side high, pull it down to the bottom, and then say, hey, wait a minute, isn't this the rectangle formation, the large rectangle formation that we've had webinars on, etc., for the Chapman wave? Doesn't this also resemble a kind of a lopsided cup formation? Yep. And doesn't it also represent, in a certain way, a pattern that shows you higher highs and higher lows? But at the same time, within the context, this is one that I didn't update the notation. But isn't it also showing you that the technicals are holding very nicely? So how do you use these? These are very simple techniques. How can you draw a trend line? And I'm going to take just over and over again. You can send your requests in, subscribers. To become a subscriber, just go to the front page of TFNN. And these are techniques that I like to, I know it looks complex sometimes because I've added all these different things and I like to keep it there as a study piece. Here's the Chapman wave falling axe breakout pattern that we were looking at. But at the same time, I'm also saying to you, you can keep it, I would get rid of most of this because as history is done. Now I'd keep the big cup formation, and I'll show you what's important. So it's going to be very, very influential in terms of showing you a pattern from a blank chart, and then I'm going to take them all away again. And now you're looking at that blank chart once again and saying, hey, wait a minute. Now my eye is starting to picture something else. I'll never forget once my wife and I were on vacation in London. I believe we were on our way to visit our parents in South Africa. And we always use London as a stopover because the hour means you can get there early in the morning and then you can spend a whole day there and get the plane in the evening. I don't know if it's still like that. but you had a whole day in London. It was rain. But always, even though the weather in London is miserable most of the time, whenever I've been there, even if it's been 3 weeks at a time, had wonderful, wonderful weather. Just once it was snowing. That's another story. So we were in the store in one of those little groovy areas in London, and Piccadilly Square, I don't know where it was. And I'm standing there. I'll never forget. I was in my my long blue English colonel's jacket. I don't remember what it was called. That was just a coincidence that I was in London at that time. Something I bought here in Cambridge, Massachusetts. And I'm looking at this painting, and I'm looking at the painting. And I'm looking at the painting. I did graphic arts when I finished high school. So I'm looking at the design, and I'm saying, that is so nice. And as I'm looking, this young woman on my left looks at her friend. She says, "Oh, that's Lennon, John Lennon." And I'm looking, and the dots in front of me just suddenly changed, and all of a sudden there was this picture of John Lennon. I'll never forget that. And ever since then, I've tried to look at charts, and I look at for John Lennon. I look to see what there is, because you could look at design, but you've got to look at the flow. You've got to look at other things. So that's what I hope to be teaching. Of course, I'll be discussing our coming picks for the next quarter, what I'm looking at, what has worked so well, what we're still holding, what I want to keep, what I think the infrastructure plays are, and why there could be stalling in certain areas. So it's going to be, I'm really looking forward to it. It's going to be a summation and a flow through, looking at what could be coming up over the next weeks and months, and at the same time showing you the patterns. Now, I need to do something real quickly. I wanted to show you this here. This is the, so here we are. Look how the pattern, look at this cup pattern, then the arch pattern. Now we're trying for a cup pattern once again. And at the same time as going for the pattern, what are we looking at here? We're looking at some kind of MACD follow through to the 1 minute chart of the E-mini, trying to get back. It's a real struggle to get above 4,018, the 200 period exponential moving average. Can it do it this time? Keeps making lower lows and lower highs. We'll see what happens. All right, we'll follow that a little later on. Now what I would like to do is to go back to the IWM and say, hey, wait a minute. So you remember the NASDAQ had that a pretty serious decline and consolidation, and now it's come all the way back. And if it gets to a peak D here underneath the previous D, I never like that. I like to break out on the cup formation. I want to break out in leg C so that you're way above the left side high. You're in new territory. Whether it's all-time high, doesn't matter, but above what was there before. All right, now here's the thing that I'm concerned about. I think that Russell 2000 is now, even though we are long, but I think we're going to be taking more profits off from the 175 entry point back in November, because I think this is making a second arch and it's beginning to fail. Now, will it do what the Qs did? Will we have a rotation so the Qs are now, in a sense, leading, while the Russell, which was leading before, is now digesting? Are we going through this rotation, saying maybe the Dow is now going to have a period of rest as the NASDAQ comes on? Or are we getting close by next week, seeing a unified sell-off where we have at least 7 to 12-day decline, something like that? Well, that's to be seen. Meantime, back at the ranch, gold is doing very nicely here. Gold is up 15, broken out above the left side arch high. This, in fact, could be a turnaround. We could, and here's another pattern I'll be showing you in greater detail. This could now become, instead of the lowercase h going to a lowercase m, so far this is successful, so I have to get rid of this side. Say, aha, wait a minute. You could be forming the pattern that becomes an H, the cup formation. So look at this. Where did that go to? 1, 2. So, come on, click. They are. You could be forming a cup formation, and that says that gold, in fact, could start to break. It doesn't have to go wild, but it could break out to the upside, go test the 1811 area, 200 exponential moving average, as the dollar, which has had a very good move, now it's a deeper correction. It's down 36 ticks, but look at this. Leg A, single move down from that high that was made right there. What did I say? It was 93.44. Yep, 93.44. Let me type that in because I think that's going to be here for a little while longer. 93.44 as a high, and we're at 92.08. So we're giving back in the left side, right side. Look at this. The time to the left on the right side is almost matching the left side. So we're going to be watching this closely as the dollar takes a breather because it's had a fabulous move up. So those are the things I wanted to look at. I also wanted to show you the crude oil. Crude oil is in the lower range, just kind of stuck there. High-grade copper, lower range, just kind of stuck there. TLT, kind of mimicking gold to a certain extent, just watching it very closely. So I think we've covered a chunk of what I wanted to go here. Now I can take calls and questions. Got a bunch of questions coming.
Hi,
I'll be
folks.
back.
This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, Butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So I said we were looking at that, and I said, watch the cup formation. So now we've got it as a leg A, leg B, and we're just about, no, we haven't started leg C yet. This is, I don't like this when it stalls. I prefer when it's just a beautiful straight up move, high highs, high lows, high high, and then just peak A, then peak B. Oh, C and D. I just made D. All right, that's what we were looking for, D. So it goes to a D, A, B, C. This is the E mini. went to a D. I don't like Ds underneath the previous high. Should be strong. That doesn't mean to say it can't keep going, but this better be a very strong D going to that 40-80 level. Okay, that's enough for that. Let's get back to our story. So, okay, the questions. Could I look at a NIO, NIO? This is the electric vehicles. NIO. Yeah, this is sideways stuck. Just remember, when stocks get stuck, I'll talk about this in my webinar coming up a week from today. I'll demonstrate for you just how often and how long prices can be stuck in a sideways rectangle formation. A narrow sideways rectangle formation is different to a wide one, and this is getting narrower and narrower. So, just think of it as stuck. Let's just put Tesla in the same category. Tesla is making a higher level consolidation. It's slightly different. This is more the lowercase h goes to the lowercase m. Let's see if it can break to the 745 area. It's at 688 right now. I think for the moment it's stuck. So a couple of things I wanted to look at here is, so the question in the YouTube, Tiger YouTube, CMBM. I'm not sure the question was for me, but I did see it go by. So CMBM is, I haven't even looked at what it is. I've done the notation. This is, let's see, Cambium network, monthly chart goes. Now, I would say that anything that goes from $3.57 in May of 2020 to today's high of 61.75 is definitely a rather accelerated and strong move in a single leg A up in the monthly chart. But when it does it that strongly, it means that the whole candle that we're looking at now, that's gone from the 46.52 low of April to today's high. This is just April, folks. This is the what is it? We're talking about the fourth trading day or something. What is the eighth? Yeah. So we've had just a few trading days in April. It says that there's a chance that this whole area between 52 and 45 could be the support level. It doesn't have to make the Eiffel Tower straight up, straight down move. This is spectacular. Then you look at the weekly chart and you say, this candle, first of all, gaps. There isn't a gap up between the high of last week and the low of this week, but there's a gap from the close, and it's a massive candle. And it's in F/C, an alternate count in the ChapmanWave methodology. Just for the moment, I'm going to be about as conservative as I can. And I say, yeah, technically, sorry, it's not. This is even more. I did it on that. That isn't correct. It's actually leg B, F/B. So this is a spectacular move. They're doing something right. The daily, just to be conservative, I'm calling this, it could be C, but I'm calling it a D because so many other charts are in D in the same pattern. I'm calling it a D just to be strict in the ChapmanWave methodology. So it's acting extremely well. Is it getting a little toppy? Well, the stochastics at 82%. The MACD is very strong. I would just say to you, because of the two candles, the doji candles from yesterday and the day before, this kind of candle breakout is really good. So I suspect if I had to put this in, I'll probably regret doing it, but my eye says you can do it. I think the 62.5 to 63.50 area might become some resistance, but I wouldn't be surprised if there is a pullback over the next week. If there is a pullback, it comes back down to 54, 6 points. 7 points? No, that's a little much. So, yeah, I'm maybe 57 to 55 is support. So it's looking great. Hey, congratulations. If you're long, congratulations. CMBM is the symbol. Wow, an amazing chart. The next thing I was asked about, would I look at dollar out of Caterpillar, Triple M, Dow? That's a question. All right, well, let me just have a look. So Caterpillar has a spectacular move. It's making this arch formation within the rectangle. We know this for those of you who are used to the ChapmanWave methodology. We know this pattern really well. It says that in the rectangle formation, if you do make a cup formation, you can go just about under, just on, or just above the high that was made for the flagpole left side high. And then you've got to be careful because you could see some kind of a pullback. And that's what you're seeing after a peak. D in the weekly chart just misses. Look at this. Caterpillar makes a high of 237.78 on the 18th. It makes a high of 237.01. Just misses on the 31st of March. And then on the 6th of April, it goes to 236.68. It makes like a peak C1, C2, C3, triple top. Now it's just pulling back, digesting its gains. So, yeah, maybe dollars are coming out. Yeah, Triple M, let's look at Triple M. Wow, nice move today, up $1.34 at 196.29. That used to be part of my Dow quartet. GE, Caterpillar, IBM, and DuPont. Oh, and then GE got taken out. IBM is the only one that's left. DuPont got changed. It's now Raytheon, DuPont to DuPont, Raytheon. No, was that right? No. Raytheon is Raytheon. Yes. RTAX. Raytheon Technologies. Yep, they combined. There's the same pattern, right? There's the cup formation going to an arch formation. So, yeah, this is, you're right. But at the same time, I'm still saying that the patterns I'm looking for suggest strongly. So this is continuing leg D. It's above. Okay, good. This is the pattern we were looking for. 4,081. I think there's a chance that we're going to rally to the day's high, if I'm correct. Oh, I shouldn't say that, but that's kind of what I'm looking at. If after 1:30 or 2 o'clock, the Dow is up about 50 points or more, then there's a chance we can rally into the high. And I would like some confusion here for those people who are thinking, oh, we've made a kind of a top. I'd like flurries to the upside. So the Dow's already got to peak D, S&P's now in leg D. So everything's in place to say, be cautious. That's the most important thing right now. What's my message? Just be a little cautious right now. Most importantly, so I was asked about this, if I look at the SPY. Yeah, the SPY, a little doji, tiny candle right now, 407.75, all-time high. Now, the big question is the weekly chart. Is this a G or is it a C? The ChapmanWave instant restart, a little complex one, but it's still is absolutely legitimate instant restart, says it's probably a leg C. The MACD is good, not great, but good. Stochastic strong at 92%. On-balance volumes a tad overbought. Relative strength is good. We'll see. We just have to let this play out. But now we're in the area where we're in a leg. Finally, this is a continuation of leg B in the monthly chart. Isn't that spectacular? And it says 2021 should see higher highs based on the monthly chart of the S&P. I'll be back.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD, Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi folks, we're back. Basil Chapman and Tiger Technicians Hour. Don't forget my opening call daily newsletter. A question about eyes. EYES is second, what is the name of this? I've never actually looked at the name. Second Sight Medical. All right, so it's trading at $8.69, up 37 cents. Sounds like a lot because it's up 4.4%, but it's stuck in the range. And let me just show you, there's the one rectangle. It's been there for 2-3 weeks, and now it's got another little rectangle. So I'm just going to say, I do think this is in play because of the big moves, but it's also, it gets sold off very quickly. And when it has a big spiral to the upside, it's usually taking quite a little time to go sideways before it starts up again. It's almost as if, like a biotech used to be in the old days, they'd pay the biotechs, pay a lot of people, this is my impression, with options, and then every month you would just suddenly see a spike in the biotech stock that you're following, and then it goes back to $3 or $2 after hitting 5 or 6, and back and just waits until the next 4 or 6 weeks. So I think that this is not quite the same characteristic, but the price movement has the same agility. So I'm just saying, look, keep it simple. At 8.68, if it starts to trade for 2 days underneath, right there, underneath $7.90, $8.10 to $7.90 there for 2 sessions, it's kind of done. It's going to make a lower low, and it's going to take out the low that was made in the 5th of 724. That makes it really important that it goes above yesterday's high of 942. But right now, it's just sneeze. It's just stuck in this narrow range, narrower and narrow range. This is one of those stocks that when it starts to pick up and it takes out left side, it's already filled in the gap, but when it takes out left side resistance, that's when it really starts to climb. But it has to hold by the day's end. It can't bounce and then come back. It must close near the high of the day with a pretty decent move, and I'd say that the move should be 8% or more. I hope that helps you. Next question I had was Baidu. I don't know why we're looking at Baidu, because it's just stuck. No, it's just stuck. You know, stuck is stuck. Remember, rectangle formation can last a lot longer than your patience. Question came in about Jets. Yeah, that I want to look at. Jets is, this is the U.S. Air, here we go, U.S. Global Jets ETF. And it went to a peak C. isn't this interesting? All the talk about bookings, etc. And I know that from a resort that we always go to, take the family. We always go in August, and they've got a special going on, and it's kind of getting sold out really quickly. And even last year, funnily enough, it was not sold out, but it was. They had some big sales. They went last year, so yeah, we could keep separate and all that sort of thing. Most importantly, what we're looking at right now is that the jets, U.S. global jets, airline, basically this is an airline index in a sense, is making an arch formation, the one that we just saw in the E-mini. And now look, it's starting to pull back after the peak E daily, peak F weekly, only a peak C in the monthly. So it says maybe in the interim period, you could see a couple of things happening. A question about XLE. XLE is the energy, S&P Select Energy Spider Fund. Same pattern. There's the dreaded H. What the heck's the dreaded H? For those of you who don't know, it's where you come down sharply, then you try to bounce at it. Usually it's at a peak A or peak B. There's a failure pattern. This has gone to peak A right there. Peak gray A because it's underneath the previous high, and a gray B, gray beard. And this could turn into a B minus because it's starting to pull over at 48.31. If it closes under 48, there's a real good chance it's going to test the low that was made both in the daily and the weekly chart at 47.26 on the 23rd of March. And that's going to be interesting because these things should be screaming to the upside, right? If people are starting to get back to booking air flights and stuff like that. All right, so that's, on the upside, you could make the lowercase h that goes to a lowercase m pattern. So I'll show you this here because for those of you who are new to my work. So the pattern I call the dreaded H is when you come down sharp, you try to rally in an arch formation that looks like a lowercase h. Take out the left side, you can keep going down quite a bit. And on the right side here is the reverse Y, green, because if you take out in the Y pattern, this cup formation, if you take out the left side high, you can go quite a bit higher. I'll be discussing all of these patterns over and over and over, plus what we're looking at for the third, January, March, April, May, June. Yeah, for this coming quarter. And we'll be looking at different patterns and what we're trying to get into and what we like. A question came in about MJ. MJ is the alternate harvest. Again, sideways trading band is trading at 21.96. This is alternate harvest. This is a cannabis ETF. It's going to find favor at some point this year, and it's going to really have a good move. But in the meantime, it's had a spectacular move, almost as if some fund was buying these things. We're long from 16.50 and took profits all the way up. It went all the way to 34.58, a nice double there. And then it pulled back, and it took us out of our remaining core position for a 20% gain at about 1990. We're back in at about 22.49, so we're just down a little bit. But I like this as this is for us, especially since we've had huge gains in this, we can afford to hold it with a wider stop. So we've got that for now because I do believe it'll have flurries to the upside, but it's still an IPO basically. Think of it as, yeah, it's been around since the beginning of time in one form or another. Who knows if Adam's apple or Eve's apple was in fact some kind of hallucinogenic, but it's been since the beginning of time. But as a public company, it's only been an IPO since December of 2015, in which time it's gone from around about 25 to 45, big deal, down to 8.81, and then back to the most recent high, 34. So this is an IPO. Because when you get into the real world of being a public company, there are strictures, there are vicissitudes of the marketplace, there are so many things that are going on that you can't just anticipate that you can do whatever you want. Oh, thank you very much, Dan from New York. Ay. The one that we got taken out of the other day. Well, I'll talk about it. I like to face facts when they stare you in the eye. So we were long blank, two positions. We split a starter position into two. We were long, and we just got stopped out at 39, and here the thing is at 44.90. It happens. Leg D to the upside. Blank is Blink Charging Company, charging stations. Hey, it happens. What can I say? I'll be back in a moment.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His ChapmanWave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary ChapmanWave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So anyway, Blink Charging Company, yep, it's gone to a leg D. And look at I did all the analysis. I did everything. This was the timeline that I had. And I probably should have made the stop on at least one of the positions a little bit wider and just let it play out. But I'm getting emails from a number of people over the last day or so saying that, yes, they're still long. Thank goodness they're still long. But I'll have to figure out what we're going to do here. 45.15 right now. Rich has a question. Do you have a price target? Do I have a price target in mind for CMBM? CMBM. Let's see. So what I'd say, price target. Well, this is an IPO, so you can only do kind of Fibonacci expansions, etc. I'm just saying to you that it's acting really well at this particular point. It's more important that at this particular moment, CMBM is trading up 2.87. I think that the key support is in the 57 to 55 area. To predict where it will stop, all I can say is that if this is only leg A in the monthly chart, over the period of 2021 this year, it should get to at least to 68 or 75. But you have to see how it pulls back after this major up move. So a couple of questions just came in right now. Let me just get to that right now. Do you still have your Agilent? A is a symbol. Yes, we do have Agilent from the 70 area. It ran all the way from, we've got it from 70 back in April of last year. We've taken a little bit off along the way, really good gains. And here it is at 130. I like it very much, but it's in that same category that says from here, we got to watch it closely because it's starting to struggle a little bit. But yes, it's holding very well at 130. The key support will be 126. Stay tuned. Great program for the rest of the day. Check out both. Don't forget, a week from today, I'm doing my webinar for subscribers. You can become a subscriber. Go to the front page of the TFNN. Have a wonderful day. Hope to see you tomorrow.